The question is, how do you achieve it? What do you think on that aspect when it comes to scaling and successfully exiting from a startup?
I think most founders are looking for an easy route, and sometimes there isn't. You've just got to push hard and push through, and especially if you don't have money. The most recent business, which sold for the 8 figures, kind of 8 or 9 years of relentless commitment. There was no easy road for me, no substitute for hard work. I was probably doing 12, 14 hours a day, a lot of hard work, a lot of grit, a little bit of luck as well. I think always goes a long way.
From 0 to 8-figure exit, what does it take to scale and sell a company successfully? Today, we're diving into a mind of a serial entrepreneur, advisor, and investor who's not only built impressive portfolio across 27 companies, but also reshaping a lot of industries. Today, we have Luke Tobin with us. Hello, Luke. It's a pleasure to have you.
Wahid, good to be here. Thank you for having me.
So many founders have a dream of scaling their company to a figure exit. The question is, how do you achieve it? What do you think on that aspect when it comes to scaling and successfully exiting from a startup?
Yeah, so my background has been fairly diverse. I've actually had 8 of my own businesses now over a 20-year period. A mix of success in there, also quite a few failures and some times when it hasn't always gone to plan. I've managed to successfully exit 4 of those businesses. But I think, the journey of entrepreneurship and scaling businesses is one of continuous learning and opportunity to learn, right? So, I think I've learned probably as much, if not more, from some of the businesses that struggled or didn't get off the ground. The most recent business, which sold for the 8 figures, kind of 8 or 9 years of relentless commitment. There was no easy road for me, no substitute for hard work. I was probably doing, 12, 14 hours a day, a lot of hard work, a lot of grit, a little bit of luck as well. I think always goes a long way.
Awesome. Yeah, luck is the factor as well. But most of the entrepreneurs, because we also support a lot of founders and companies, and we believe in bootstrapping. Let's say if you want to go for a global success, you'll have to start. You'll have to prove that the product or service that you're offering has a potential that can be scaled, and then the investors will come in, and then you can scale the company. So tell us about your journey of bootstrapping business, because like being part of 27 companies, that's incredible. You don't look you look very young, by the way. So tell us about the product, or let's say the company that you bootstrapped and scaled it to a global level. How was the journey like, and what were the challenges, and how you achieved that kind of growth in that particular business?
I'm getting grayer by the day, but a bit of moisturizers kept the face young, which is good, but probably older than I look. The journey for myself has been an interesting one of, like I said before, false starts and some that have paid off. I think where you mentioned 27 companies, a lot of what I do now is look for really good founders that need a bit of support, need a bit of guidance, sometimes need some capital, but more often than not, just need some stepping stones for success and some understanding and some guidance from somebody that's been there and maybe walked some of that walk before and can hopefully help them to avoid road bumps along the way. So a lot of what I do now is deploy capital and advisory into scale up startup brands. And that's really where I'm adding a lot of value. So I would say 19 or 20 of those investments are passive to a point. When I invest, I tend to be the smart money on the table. I don't just put capital and walk away. I put capital and time. So yeah, it is busy, but it's busy in all of the kind of right ways, I think, because of that.
I'll pick up the point that you mentioned that it's passive. So a lot of projects that you wet on the daily basis, and let's say you consult them. So how do you identify, what are the key identifiers like for you before investing into any startup, into any business that could give you a kind of a passive income, and also you acting as a partner or let's say a consultant to grow that business? So what are the key factors you look at?
First and foremost, is it a business that I understand? So I get sent a lot of pitch decks and a lot of really cool looking pieces of technology and ideas, concepts, whatever. Secondly, is there good chemistry with the founder? I.e., is the founder open to feedback, open to criticism, open to stress testing some of their ideas? A lot of founders, in my experience, hell-bent on their idea and they believe it so much, and it's great, you need that passion. And then, does the commercial model make sense? Does it do I believe that it's scalable? Is it something that's defendable? All of these things take a part. But if it's really early stage, pre-seed, you're really leaning into the people, the founder, the background, the experience. I back a lot of second-time founders as well as some first, but a lot of second-time founders because they've probably weathered a few storms in their previous businesses. Some may have been successful, some may not have. There is an affinity there for kind of repetitive success, effectively. That's not to say I don't work with some first-time founders, because I do, but I think you're constantly, as an investor, tweaking your thesis to try and find what works for you and what builds, success.
100%. And I have talked to a lot of VCs, even in this show. And the first thing that I get to hear is the founder, the idea itself, and then the technology, of course, is important. Let's say if you want to solve a problem that was quite hard to establish kind of an infrastructure to build something, right? So I have seen founders who raised money on the idea itself, but now things have changed after the AI, after the no-code solutions, a lot of open source platforms out there. So a lot of founders that we work with, they quite don't understand what is the perfect timing to go for a fundraise. Like I always say that I'm a believer of MVP, minimum viable product. You do it, you take it out in the market, test it out. If it works, if you have numbers, then investors can do the mathematics and they can calculate their ROI, and they would definitely be interested. And as you mentioned, that you look for immediate success in any project. So what is the best timing in any startup to go and opt for a pre-seed and seed round? And then of course, eventually we'll talk about the exit as well. But if you could shed some light on that, that'll be awesome.
I always got them to a profitable position before I ever explored capital. And it's interesting because I would say 9 out of every 10 company that approaches me for investment, they're a long way away from break even, let alone profitability. And stories that everybody's heard about people being able to run at a loss for 10 years, but keep chasing more checks and you can grow to be a great, big, massive business. I think all of that is great. And it does happen to a few, but only a few, right? So I think for most businesses and most founders, they need to kind of almost come out of the bubble a little bit and come back to reality and think about, well, let's try and get this business to a break even or profit position or as close as possible before we need to go and raise money. If that means we have to do an early friends and family round, or we have to really bootstrap and we have to, do this alongside a day job for 12 months, whatever it is, like give yourself the best chance of success. And to do that, you need to hold on to as much of the equity for as long as you can before you start to get investors involved. So I always say to people, like, you could keep building this and keep doing it actually before you take on any money. There's a fear, I think, generally in founders. They don't move fast, they'll lose the opportunity. And I get that. I can see that in some circumstances, but a lot of businesses that raise capital could have probably gone it at a different route, and also equity, cash for equity is one option. There are other options around debt financing and all sorts of stuff that sometimes is a lot cheaper for founders, which they often don't think or know to explore. So I think that's that, it's all of those things are important to consider.
Absolutely. And you mentioned a very important point about the break-even point, right? So that's crucially important for a founder to achieve, or let's say have a short-term or long-term goal to identify when exactly the company's starting to get the revenue. Now, in terms of a lot of people, they also tend to have technology as a label so that they can go for funding and all that. These days, there's a lot of hype around AI. And if you look back like 2 years back, there was a huge hype around blockchain. Even right now there is, but most of the founders, rather than solving the problem, they just create a narrative that we're building something on AI, blockchain. So how do you see the technology part of it, and what's the weightage in any product that you invest? Like how technology is important, like solving a problem, that's one thing, but how much importance is there for the technology itself?
It's an interesting point you mentioned there. I noticed, and I think it's been well documented, that in the last couple of years, if you put AI into your name, into your business name, you can get like 10 times the valuation. I mean, it's been a bit crazy, right? Product or service offering, company offering these days is critical. And I think with AI, it only accelerates the need to be more efficient internally. Now, that can be efficient in a sense of just your operational processes. It can be adapting AI to streamline processes, whatever it might be, or it could be actually having AI or tech-led AI at the center of your product. I think all of it is important. And I think, there's a lot of investors out there now that have lent into it as kind of like their thesis and their focus. For me, it's part of the equation, right? So it still takes me back to those original principles of like, do I get it? Is this a defendable product and why? First time, early movers, whatever it might be. Like, do they have a solid network, or have they got a route to market that's unique? Like, is there something else? So it is important, and it's only going to become more important, I think. A lot of companies, and you alluded to it there, have really lent into, well, we need to talk about blockchain, we need to talk about AI, otherwise we get left behind. It needs to be considered, but I think there is room to also just focus on what you can do really well, rather than trying to pivot everything just to be AI focused. So yeah, it's an interesting time. It is an interesting time. Look, all industries and all businesses are going through a period of, I guess, disruption. And, I think it's exciting for the future. Investing a little bit more challenging at this point, because, some of those businesses today that might look like good businesses could be disrupted tomorrow. So yeah, it's an interesting time, that's for sure.
Yeah, I agree. Just a positive side of AI is the AI can give you a lot of insights. It can also act as a CTO as well if you're not a core technical person. You have been on the both side of the tables, right? Now you're investing, and then you've also built successful companies. And also you created the Success Method, a newsletter for that helps around 30,000 plus high performer entrepreneurs and all the community members. So what are the key factors that you believe that are essential for an entrepreneur to follow to get a successful exit? And if you have any example, or let's say a case study that you have gone through that process, give us some insights. That'll be great for our listeners.
Yeah, I think there's a lot you can do to prepare yourself for an exit. And actually, the earlier you start thinking about this in your life cycle of a business, the better. So simple things, from structuring your data room early on, thinking about like, how do you always, when you come to like thinking about how you present your data. So the more you can think about that early on, the easier it will be later. I mean, I've sold 4 businesses now in 3 different industries. And every time, so the first one was a bit of a scattergun approach. It was all a bit of kind of trying to figure it out. From the second one onwards, I realized that every business I start with the ambition of selling. That mindset shift is a little bit different, because if you just start building a business from day one and it's like, oh my God, this is my baby, this is my dream, sometimes you forget that at the end of it, there will be a cycle like there is to everything, where at some point you may want to sell this business. So if you start thinking early on about what that could look like, how you could structure it, how you can make it attractive, all of those things can make a big difference. One of the things we talk about in the Success Method on a weekly basis is some of those habits that you can put in place that help you to kind of scale to sale. And our kind of strapline is scale to sale without burning out in the process. So, I've been through elements of burnout. I've been through periods of kind of overworking and heavy loading things. And there is other ways of doing it that means you can avoid that. So again, some of these habits early on, some of these structural things, the right psychology, taking the right time out, appreciating and respecting your own boundaries, all of those things play a part in making you attractive later for sale. But probably one of the key differentiators I see in businesses that achieve an exit and a successful exit is they've thought about that succession plan early on. And they've also thought about optically, like, how does this business and how will this business appear to a potential acquirer? And I think you're doing a good job if you get approached by other businesses to sell and you don't actually have to go to market to sell. So 3 of my companies, they came to me, but that was by design. So I'd made the company attractive, and then I'd promoted it through PR and my own personal brand to a point where in the end, people, I want that. And then they came in and asked to buy it. And puts you in a very different position to you going out and saying, hey, can somebody buy this from me? There's little methods there that you can do, little tweaks in mindset that can make all the difference in the long run.
Very interesting point that you mentioned about making a business seen by the investor so that they can approach you. You've also been a digital marketing expert as well, based on your profile. So most of the founders, even myself, I'll tell you how we started and how we build this ecosystem.
Yeah.
There is a difference between a services-based company and a product. So when we started to build products, we had failures as well. And then we realized that if we want to keep building products, we'll have to have an infrastructure in place, right? That brought us to have a services-based business and creating an incubating studio where we can have a cash flow coming in, and at the same time, we're building and cooking these products, right? Mm-hmm. But all the founders that I work with, they focus a lot on technology, building the product itself. When it comes to marketing, when it comes to scaling, they're like, oh, I don't have a lot of funds. I don't know how to do it, right? So tell us from the point where, let's say, the product is ready, the team does decides tomorrow you're going to launch, what are the next steps? How you structure it to be a global success so that investors can reach you?
Yeah, so the very first thing you should do, probably before you start building the product, is think about your go-to-market value proposition. Is this actually going to be something that people want? Great ideas in principle, but actually when they go out and try and sell it, nobody wants it. So I think early validation, early MVP, early testing, a good understanding of your go-to-market and that kind of like that structural marketing sales pipeline piece is really, really important. It's something that so many businesses overlook. So this is where actually having like a CEO sales type individual, a CTO works so well, because you get one that's running in the direction of like, well, hey, how are we selling this? And then you got the other that's going, yeah, but I want it to be pretty and do everything. So that kind of perfect harmony works well because of that. But yeah, I think don't neglect the go-to-market. I think we know that technically it's possible. It's going to take X amount of time to deliver that technically in that time frame. We should go out and do like a little mini test, even if it's like a Figma design, and go and interview 100 companies that could be your ideal customer profiles and say, you know, we want to get your feedback on this. What would this need to be in order to, you know, just get early validation is all I would recommend.
Yeah, of course. To test it out in the market, it's essential to see what market thinks, because whatever you're building, it's based on your assumptions. It's the users who have to give you the right answers about your product. So 100%, it's clear. But let's say when it's time to launch the product, right? When it's time to grow the product, when you work with these companies and that worked out for you to make them, you know, investor ready, or let's say capable enough, these products to be capable enough so that investors can reach them out. What are those key strategies?
So a really solid marketing and storytelling campaign is what you need. And that's a mix of different things. I mean, in this day and age, it is having a solid personal brand associated with the founders. That's critical. You know, if we think about the biggest companies in the world, we think about their CEOs as much as we remember their names. So a solid personal brand strategy, a digital marketing campaign that drives, you know, awareness, growth, as well as hopefully some revenue. That's really critical. I would look at ambassadors, influencers. You know, how do you build credibility and trust around your brand? You know, have a really solid kind of go to market around those key principles. And I think you set yourself up for success, basically.
I agree. But when it comes to bootstrapping a product, right, you have limited funding. Most of the founders, they invest to build the product, right? When it comes to marketing, of course, that's like a huge money that we're talking about, having ambassadors, like a public figures. Unless it's not a charitable project, if it's a profit-making product, you'll have to invest a lot of money in the marketing. So
Maybe, yeah.
a founder who has not approached for fundraising, who has not got any investment, they bootstrapped the company, they just went out in the market with the product. Now, in order to do that effectively, of course, they don't have a lot of funds. So this is a real world problem. Most of the founders I meet and I've talked to, this is a real challenge for them. So what would be your advice for them?
To be honest, that's quite easy. So I've been there before. Dedicate lots of time to get in front of your customers personally in whatever way you can. And you can do this in a fairly cost-effective way if you leverage LinkedIn and your own audience. You could ask for people to do introductions for you. You could do emails, you could do calls, you could attend events, you could do all those things that I know typically founders do. But I think most of them do it passively, right? So they'll try like a day of phoning companies, or they'll send some LinkedIn automation rather than testing themselves till they work out which message actually works. They'll do everything from a slight arms off approach, and they don't go fully in and deep on this stuff. So when I launched my marketing agency, I was probably spending 50 or 60 hours a week just on lead generation. I was the only salesperson for the first 2 years, and I grew the revenue to nearly 3 million in that time, just me selling. But I was just relentless. So I was doing probably 10, 20 times the activity of a normal salesperson, because I was trying to find a method that worked. As soon as I found that it worked, I'd replicate it and I would just hammer it until, you know, I was happy with the results. So again, I think most founders are looking for an easy route, and sometimes there isn't. You've just got to push hard and push through. And especially if you don't have money, if they've got money, can chuck money at problems. If you don't have money, you've got to work really hard and put in the graft and do all of that outreach stuff yourself. So you can do it for free. Social media has given us a platform to contact and get in touch with people and find out where they are, find out what they're doing. But you've got to be willing to do the time and put in the hard work. That's really what it comes down to. But it doesn't cost anything.
No, you're right. And you mentioned a very interesting point about having a mixture of talent in the team, the core team. So the CEO should be focusing on the sales, and he should be a good sales, person so that he can take the product forward, and then the CTO should take care of the technology aspect and all that. So yeah, that's perfect. And LinkedIn is the tool where we found you as well. So I 100% agree. So yeah, we'll touch base on a few points regarding Tobin Capital. That is your company, and you're the founder. You're consulting startups, and let's say from our audience, if somebody wants to get in touch with you, the startups like companies for acquisitions, tell us about how it works and how people can approach you.
Perfect. So there's a couple of ways. So my website, luketobin.com. On there, we have a range of products that we've created for founders, early stage businesses to help them develop tried and tested methods and things that I've actually spent. So they're on there. They're really cost effective. Some of them we give away for free as well, because we want to support our network. And then there's other elements of service around that, from advisory to exit planning, like all of those bits. We are launching a cohort to help kind of scale to exit as well. That will be coming out in the next couple of months, as well as a few other kind of dedicated digital products. So check out the website, luketobin.com, but also there's tobincapital.co.uk if you want to look at investment. There's a really nice questionnaire on there that you can fill out, complete, submit your company for review, and myself and one of the analysts will always look over them. We promise to look at every single one that's sent through and come back with feedback, even if it's not an investment for us. So, and then obviously social media, feel free to connect. It's Luke Tobin across most channels, and always happy to support and offer some guidance wherever I can.
Absolutely amazing. And we'll put the links in the description as well, so whoever wants to connect. Just one last point that I just wanted to focus on, because when somebody approaches you, what industries you're investing in currently? Let's say, are you a pre-seed investor? Are you a seed investor? Or how do you typically operate? If you could just give us some insights on that.
So I mentioned a bit earlier, our thesis has changed a bit over the years, but effectively we've invested in around 7 different industries. We're fairly industry agnostic, to be honest, but we always look for brands or businesses that are challenging the status quo in some respect. So, is it new technology? Is it a new idea, new concept, new methodology, something that's defendable, that's growable, scalable, an element of need for strategic guidance, advisories, looking to maybe build out their board. All of those things are areas where we can support. I've got a really extensive network of about 270 high net worth individuals as well, which often follow us into investments. So from an investment support perspective, how to raise capital, that's another area that we can add some value as well.
Amazing. Thank you so much for beautiful insights. And for all the listeners, audience, we'll put all the links here. If you're building a product, if you're looking for consultation, if you want to scale it to a global stage, you can reach out to Luke on the website, on LinkedIn, and we'll share all the information. So once again, Luke, it's an absolute pleasure for us to host you today on our show. Thank you so much for your time.
Thanks for having me.